Ladies and gentlemen, let me ask you a question. Are you letting your money work for you, or are you still working for your money? Because the truth is, wealth isn't about how much you make. It's about how well you make your money move. There's a reason why the rich keep getting richer. It's not luck, it's not timing, it's not access to some magic stock tip, it's strategy, mindset, and playing the long game. The smartest investors aren't chasing trends. They're building empires, quietly and consistently, while the rest of the world is distracted by noise. Today I want to show you where the smart money is flowing. Not just where it could go, but where it's already going. Because if you want to build lasting wealth, you don't follow the crowd. You follow the capital. The first thing you need to understand is this: smart money follows value. And value isn't about what's shiny and hyped. It's about what solves real problems, scales, and stands the test of time. Let's start with technology and artificial intelligence. Yes, AI isn't just a buzzword anymore. It's the engine driving the next wave of transformation. Smart investors aren't buying into every AI startup that flashes a cool interface. They're looking at companies that build infrastructure, that automate entire industries, that create exponential efficiency. They're investing in businesses that own the tools, not just the toys. Think about it. Software that eliminates redundant jobs, systems that diagnose disease faster than doctors, platforms that personalize learning for every student on the planet. These aren't ideas, they're revolutions. And smart money always bets on revolutions. But here's the second secret. Smart money diversifies with discipline. While one hand is in technology, the other is in tangible assets. I'm talking about real estate, not just buying houses and flipping them on weekends. No, the smart money is in multifamily units, commercial properties, storage units, and land in developing corridors. It's about cash flow. It's about assets that appreciate while paying you every single month. And here's the best part. Real estate isn't just a wealth builder, it's a wealth protector. Because in a volatile market, real assets are your insurance policy. Now let's talk about alternative investments. The smart money is no longer boxed in by just stocks and bonds. They're thinking bigger: private equity, venture capital, cryptocurrency infrastructure, renewable energy funds. They're not gambling, they're placing educated bets on the future. And no, this isn't about hype coins or gambling on IPOs. It's about understanding ecosystems. It's about betting on the picks and shovels during the gold rush. Not just the gold. Let me give you an example. During the early days of the internet, many people rushed to buy tech stocks. Some made it, most crashed. But guess who profited regardless? The companies selling servers, building code frameworks, and providing security. The same logic applies today. Don't just ask what's hot, ask what's essential, and put your money where utility meets scalability. But here's a critical insight. Smart money isn't emotional. It doesn't panic when the market dips. It doesn't get greedy when there's a surge. It's patient, calculated, and focused on fundamentals. While most people sell at the bottom out of fear, smart investors buy the dip and smile. Why? Because they know volatility is the price you pay for growth. They know that time in the market beats timing the market. You know what else smart money does? It hedges risk and plays defense just as well as it plays offense. That means allocating to precious metals, treasury bonds, even art and collectibles. Yes, art. Some of the world's wealthiest families have protected and grown their fortunes through alternative stores of value that appreciate over generations. But I want to drive something home here, and it may be the most important thing I'll say today. Smart money starts with smart people. It starts with those who educate themselves, who invest in their minds before they invest in the market. You don't need millions to start. You need discipline, consistency, and the courage to take action. You can begin with $100, 0 cents, $1,000, 0 cents, or just the commitment to learn, because compounding doesn't care about your starting point. It only cares that you started. Here's the harsh truth. If you don't find a way to make money while you sleep, you will work until the day you die. But the good news is you get to choose. You get to decide whether to be reactive or proactive, whether to follow the old rules or to step into a new era of opportunity. Where's the smart money investing today? In AI and automation. Not gimmicks. In real estate, not liabilities. In cash flowing businesses, not quick flips. In alternative investments, not mainstream mediocrity. In education, mindset, and mentorship. But more than anything, smart money invests in vision. It sees around corners. It looks beyond today's headlines and focuses on tomorrow's. So let me ask you, what's your plan? Are you positioning yourself where the smart money is moving, or are you still waiting for someone to hand you a map? The blueprint is out there. The knowledge is available. The opportunity is real. But you must be bold enough to seize it. The future doesn't belong to the lucky. It belongs to the prepared, the strategic, and the relentless. Don't wait for permission. Don't wait for the perfect time. The smartest investors aren't waiting, they're building. And now, so can you. Smart money doesn't chase trends, it builds value. This is the cornerstone of lasting wealth creation. Too often, people are seduced by what's hot in the moment, jumping into whatever the news, influencers, or social media say is the next big thing. They get excited by overnight success stories, viral cryptocurrencies, hyped up stocks, or startup pitches that sound like gold mines. But smart investors know that this mindset is emotional, not strategic. Chasing trends is like chasing shadows. They move fast, disappear quickly, and leave you with nothing solid in your hands. Value, on the other hand, is timeless. It's not about what's popular, it's about what's profitable over time. The smartest investors in the world don't follow the crowd, they follow the fundamentals. They look for companies, assets, and innovations that solve real-world problems, that have strong leadership, scalable systems, and sustainable demand. They ask, will this be needed 5 years from now? 10? Can this business weather economic storms? Can it adapt, grow, and create consistent cash flow? That's value. And that's where smart money lives. They are not lured in by temporary spikes or speculative hype. They're grounded in logic, analysis, and long-term perspective. When a trend explodes and everyone wants in, the price is already inflated. The upside is limited and the risk is high. But when you find something of true value, something underappreciated, underpriced, or simply under the radar, that's where the real gains are made. Smart investors are like treasure hunters, not gamblers. They dig, they research, they wait, they understand market cycles and emotional behavior. They know when the masses are driven by fear and when they're driven by greed. And they use this awareness to act with precision. Value building means focusing on what lasts. It's investing in assets that generate real utility, create products people can't live without, or offer services that make life more efficient, healthier, or more connected. These are not trends, they are foundations. While others are buying what's flashy, smart money is buying what's fundamental. While others are jumping in and out of markets trying to time the perfect entry, smart money is planting seeds, letting them grow, and nurturing the soil with patience and vision. There's also a level of discipline in how smart investors build value. They don't get swept up in emotional decisions. They aren't concerned with what their friends or influencers are doing. They don't chase, they lead. They build portfolios that are diversified across industries, asset classes, and geographies. They study global shifts, track consumer behavior, and anticipate where demand is moving. Not where it is now, but where it's headed. And they allocate capital in places that will create leverage over time. Building value is not exciting in the short term. It's not supposed to be. But it's powerful. It's quiet, and eventually, it's undeniable. It's the difference between building a house of cards and constructing a fortress, brick by brick. And those are the things that buildings 100% of the time. It's building value is not a hygiene. It's morality. It's building, it's organization. It's honest. And it's public. And it's buying into a business because you believe in its leadership, its mission, and its financial health, not just because it had a strong quarter. It's understanding intrinsic value versus perceived hype. It's asking what something is truly worth based on earnings, assets, brand strength, customer retention, and future growth, not based on what someone on YouTube said. Smart money builds value by creating assets that produce income, not just hope. They acquire assets that make money while they sleep. Dividend-paying stocks, cash-flowing real estate, royalties, intellectual property. They want their money to move, to multiply, to serve a purpose. And they reinvest the profits to expand the base. This is how wealth grows, not in bursts, but in waves. Not in noise, but in silence. Not in hype, but in results. Wealth isn't earned, it's strategically multiplied. This is one of the greatest misunderstandings about money. Most people believe that working harder, longer hours, or taking on more jobs is the path to financial freedom. They measure success by effort, by hustle, by how much time they put in. But the wealthy think differently. They don't just trade time for money. They find ways to create systems, assets, and strategies that make their money grow without their constant presence. True wealth is not about earning more. It's about multiplying what you already earn in ways that expand your financial foundation over time. Multiplication starts with leverage. The wealthy look for ways to use their money, knowledge, and networks to open doors to greater opportunities. They don't just save, they invest. They don't just earn once, they create revenue streams that pay again and again. Whether it's real estate that appreciates and produces rental income, a business that grows and scales without them, or an investment that pays dividends and grows in value, they're always seeking to expand, to stack advantages, and to build upon what already exists. Earning money is just step one. What separates the truly wealthy from everyone else is how they deploy that money. Do they let it sit idle in a low-interest savings account? No. They put it to work. They allocate it with precision, guided by research, logic, and risk management. Every dollar is seen as a tool, a soldier, a seed. The goal is not accumulation for the sake of having more. It's multiplication for the sake of building a foundation that can withstand anything. Recessions, inflation, job loss, economic uncertainty. The wealthy prepare for it all by diversifying, hedging, and growing what they have from the inside out. Strategic multiplication also comes from mindset. It's the belief that your money can do more than just sit. It can move, create, compound, and this mindset pushes wealthy individuals to constantly learn, to surround themselves with experts, to study trends in financial models, and to think in decades instead of days. They ask better questions, not how much can I earn this year, but how much can I compound over 10 years? Not how do I avoid risk, but how do I manage risk while keeping my money in motion? They think in terms of systems. They build automation into their financial lives. They use tax strategies, legal structures, and income planning to optimize every dollar. They understand the power of compounding and know that the most important asset is time. The earlier you start multiplying your wealth, the more momentum it builds. That's why they don't delay. They don't wait until everything is perfect. They act, they learn, they adjust, and they grow. Multiplying wealth also means eliminating liabilities and focusing on assets. The wealthy don't spend money to impress others. They invest money to protect and grow their future. While others are buying luxury items on credit, the wealthy are acquiring income-producing assets that fund their lifestyle. They know the difference between appearance and substance. They choose assets that add value to their lives, not ones that drain it. It's not about showing off. It's about building up. Another key part of strategic multiplication is understanding scalability. Earning money from a job has a cap, but investing in scalable opportunities, businesses, products, digital assets, real estate portfolios, allows income to grow without limits. The wealthy are always looking for ways to scale their impact and income beyond their time. They delegate, automate, and replicate success wherever possible. They create systems that grow independently, teams that operate without micromanagement, and assets that pay without demanding attention. They also protect what they multiply. Wealth multiplication without protection is like filling a bucket full of holes. The smart multiply their money, and then they insure it, structure it, and shield it from unnecessary risk. They work with advisors, use estate planning tools, and take a long-term view of every major decision. Every step is designed to build on the last so that their wealth becomes not just a source of security, but a platform for legacy. The best investors don't predict the future, they position for it. In a world where markets shift rapidly, technologies evolve overnight, and economic conditions change with little warning, the smartest investors understand that guessing what's going to happen next isn't the game they're playing. They don't rely on luck, hope, or hype. They focus on preparation, positioning themselves in a way that no matter which direction the wind blows, they're ready to adjust their sails and move forward. It's not about being right all the time. It's about being ready all the time. Positioning is about building a financial structure that can handle volatility. It's about designing a portfolio that thrives in both growth and downturn. Smart investors know they can't control what happens in the markets, but they can control where their money sits, how it moves, and how protected it is. They diversify across asset classes, industries, and geographic regions. They balance risk and reward with precision, always asking how their current setup would perform in different economic scenarios. They build strategies that are flexible, yet firm, able to pivot, but grounded in principle. They focus on long-term trends rather than short-term movements. Instead of reacting emotionally to daily market noise, they watch the larger shifts, demographic changes, technological adoption, global policy direction, energy transitions, and consumer behavior patterns. They don't need to know exactly when a shift will occur. They simply need to be in position so that when it does, they benefit from the upside. This kind of positioning is proactive, not reactive. It's intentional, not impulsive. They also stay liquid where it counts. Having access to capital when opportunities arise is a huge advantage. When markets drop and assets go on sale, the best investors don't panic, they purchase. They keep dry powder ready, not because they're afraid to invest, but because they know timing favors the prepared. They're not afraid of corrections, they wait for them, because that's when value reveals itself most clearly. Preparation allows them to move swiftly and strategically while others are hesitating in fear. Positioning isn't just about money, it's also about mindset. It means developing the habits, routines, and discipline that keep emotions out of decisions. It means constantly educating themselves, staying connected to thought leaders, studying history, and observing patterns that repeat across time. They ask themselves what the world is likely to need in 5, 10, or 20 years, and they start investing in those sectors today. It's not about knowing the exact outcome. It's about trusting the process of intelligent allocation, consistent learning, and strategic patience. The best investors also know that positioning is not static. What worked 5 years ago may not work today. So they evaluate, rebalance, and realign their positions regularly. They look at their holdings, assess performance, analyze trends, and remove what no longer serves their goals. This is not out of panic, but out of discipline. It's not about chasing returns, but about optimizing structure. It's a dynamic process, one rooted in adaptability and clarity. They surround themselves with the right advisors, mentors, and peer networks. They don't operate in isolation. They value perspectives and insights that challenge their thinking and sharpen their strategies. They seek information that's grounded in data, not noise. They understand the power of positioning isn't just in where their capital sits, but also in where their focus goes. They stay aligned with their vision, and they tune out the distractions that lead most people off course. They also consider macroeconomic positioning. They understand how currency policies, interest rate movements, inflation data, and geopolitical shifts influence their investments. They're not trying to outsmart global forces, they're aligning with them. When interest rates rise, they know how to pivot to income-generating assets. When inflation ticks up, they understand which commodities or sectors act as hedges. This kind of macro awareness keeps them several steps ahead, not because they have a crystal ball, but because they've studied the board long enough to see where the pieces tend to move. They position themselves not just for profit, but for protection. Every investment decision they make is weighed against potential downside. They ask what the worst case scenario looks like and whether they can stomach it. If they can't, they don't proceed. This risk management lens allows them to stay in the game longer, endure market storms, and capitalize on rebounds when others are wiped out by overexposure or reckless leverage. Compounding doesn't care how you start, it rewards that you did. This is one of the most overlooked truths in wealth creation. People often hesitate to begin investing, saving, or building assets because they feel their starting point is too small. They tell themselves they need more money, more knowledge, or a better time to begin. But the reality is that compounding doesn't require perfection. The sooner you start, the greater the effect, no matter how modest that beginning may be. It's not about the size of the seed, it's about planting it early and consistently nurturing it. Compounding is powerful because it multiplies over time. It's exponential growth, not linear. It means that your money starts earning money, and then that money starts earning money, and on it goes. The curve starts slow and almost invisible, but with consistency and patience, it begins to curve upward sharply. This is where the magic happens. What looks insignificant in the early stages becomes unstoppable in the later ones. The people who enjoy this force of compounding are not the ones who waited for the perfect moment. They're the ones who committed to the process long before it looked impressive. The most successful investors understand that time is the ultimate lever in wealth. They don't just look for the highest returns, They look for steady returns that can compound over decades. They reinvest earnings, delay gratification, and allow their investments to build upon themselves. It's not flashy, but it's incredibly effective. Even a small investment, compounded over time, can grow into a significant amount, far more than large amounts invested inconsistently or too late in life. The key is the habit, the rhythm, and the discipline of staying in the game. Starting early also builds momentum. Once you take the first step, you begin to gain knowledge, confidence, and emotional control. You become more aware of your financial environment. You begin to understand how markets work, and you develop the resilience to withstand ups and downs. Every dollar you invest, every choice you make to put money into assets instead of liabilities, adds to this forward motion. The earlier you build these habits, the stronger they become, and the less you rely on willpower to continue. It becomes part of your identity, part of your routine, part of your long-term vision. Compounding doesn't only apply to money. It works with skills, relationships, habits, and health. What you do today, no matter how small, sets the stage for tomorrow's results. Read a few pages of a book each day, and in a year, you've absorbed volumes. Exercise a little each day, and in a year, you've transformed your body. Reach out to people consistently, and your network grows beyond what you imagined. Every great result you see in someone's life is not the result of a giant leap. It's the result of small actions multiplied through time and consistency. One of the greatest advantages compounding offers is that it rewards patience over perfection. You don't need to time the market perfectly. You don't need to pick the next unicorn startup. You just need to stay consistent, avoid emotional decisions, and let time do its work. Those who jump in and out of the market, who react to every headline, who chase the hottest tip, often miss the real wealth creation that happens quietly in the background through compounding. The ones who win are the ones who stick with the plan, who stay steady even when things seem slow, and who understand that the biggest rewards often come after the longest waits. Even setbacks can be absorbed when compounding is at play. Because when you've been investing over time, a temporary dip doesn't destroy your future. It becomes a small bump on a long road. And when those investments start paying off, the scale of return often surprises even the most disciplined. It's a force that works silently, invisibly, then all at once. The compounding effect is not just financial, it's transformational. It reflects the deep truth that progress is made not in leaps, but in layers, stacked, day by day, year by year, until what you've built is greater than the sum of your parts. If your money isn't working for you, you're still working for money. This is the hard truth most people ignore. No matter how high your salary is, no matter how many hours you put in, if your income depends solely on your time and effort, you are trapped in a cycle. It may feel secure in the short term, but it's not freedom. True financial freedom begins when your money starts generating income without your constant involvement, when your capital starts producing more capital, when your assets create cash flow, when your investments earn while you sleep. That's when the rules begin to change. The wealthy understand this distinction early on. They don't measure success by how busy they are or how hard they hustle. They measure it by how effectively their money multiplies. They look at every dollar as an employee. If that dollar is just sitting in a bank account, losing value to inflation, it's not working. If it's tied up in liabilities that don't produce returns, it's not working. But if it's invested in cash-generating assets, it becomes a part of a growing machine that functions independently of their daily grind. Most people are trained to earn, spend, and repeat. That's the loop. You get a paycheck, pay the bills, buy some things, maybe save a little, and start over. It's a cycle that never ends unless you make your money do more than just sit. The moment you start investing, even in small amounts, you start shifting out of that cycle. You begin transferring the weight of your future from your back to your balance sheet. And the more you do that, the more power you gain over your time, your choices, and your future. This is why asset ownership is everything. Assets are the vehicles that carry your money forward, whether it's real estate, stocks, businesses, intellectual property, or even digital products. These are tools that create recurring value. They don't require you to show up at 9 a.m. every day. They don't take sick days. They don't get tired. They perform when chosen wisely. And they grow when given time and attention. Each one adds another layer of independence between you and the need to trade hours for dollars. The transition from working for money to having money work for you is also a mental one. It means thinking differently about spending. It means asking before every financial decision, does this purchase take me closer to freedom, or does it chain me further to the cycle? It means shifting your goals from looking rich to becoming rich. It means building a life where time is your asset, not your prison. The real flex isn't what you wear or drive, it's how free you are to choose how to spend your days. There's also a powerful emotional shift that happens when your money begins to work for you. You gain confidence, you make decisions from a place of strength rather than fear. You stop chasing every opportunity and start selecting the right ones. You stop reacting to financial pressure and start creating financial momentum. That's when money becomes not just a tool of survival, but a tool of creation, growth, and legacy. That's when you begin building a life on your terms. When your money is working for you, you also gain the ability to give, to support, to impact others in meaningful ways. It's not just about passive income or luxury. It's about having options. It's about creating stability for your family, investing in causes you care about, or building systems that empower others. The ripple effects of financial independence are massive. They touch every area of your life, from your health to your relationships to your purpose. And it all starts with the decision to stop being the only engine of your income and start building a machine that moves without you. Every person reaches a crossroads at some point. Either continue down the path of endless effort or pivot toward building systems that work in your absence. That's the real definition of smart money. It's not about chasing the next trend or gambling on high-risk returns. It's about consistent, thoughtful actions that gradually replace effort with earnings, presence with systems, and pressure with peace.